Be sure to watch this video to the end because this can save you lakhs and lakhs of rupees, actually crores of rupees if you are investing that big. But again, it has some really important things that you need to know about Indian real estate market. Okay, and this is distributed in two parts really. First off, I'll tell you about the three reasons that I do not recommend that you buy a house in India. Okay, those three reasons are objective. This is purely for investment reasons. Okay, if you're looking to invest, three reasons why you should never invest in a house in India. And the second part of this video is about how you should invest in real estate. If you absolutely have to invest in real estate, those 5 tips that you must keep in mind, that's what we're going to be talking about in the second part of this video. All of this is in a single video only, but please watch this to the end. And if you like the content, please make sure to give it a like and subscribe to the channel because it makes me so much more happier and helps me create more content. All right, so without further ado, let's begin. Right. So, guys, first thing I want you to understand is wherever you're looking for, especially in the Indian market, our traditions are such that our parents want us to buy a house, right? Our parents want us to go ahead and buy a house in our 20s or 30s as soon as possible, really, so that they can basically go ahead and marry us. This kind of a tradition has been going on in the past for ages, and of course, even though mostly nowadays we're trying to digress from it, it just still exists in the minds of our parents, and they're not wrong. They want you to buy a property so that you can basically lead your life in there, and you can basically be a happy family, right, once you have your family over there. So that's a personal reason. Okay, and a lot of people will invest basically money, and there's basically buying a house. Those two things are very different. If you're buying a house to stay in the property, that's for your personal use, right? Then this video is probably not for you, because then just go ahead, buy a house in a good location. I would say in a good location where maybe the area is nice, or you're basically staying a lot closer to your office, or basically your whole life is around that area only. Just go ahead, buy a house over there so that you don't have to travel a lot. Because I can give you an example that there was basically a person who bought a house in New Delhi's basically South Delhi area, and his office was in Gurgaon. But the thing is that he couldn't commute every day. It was very hard for him. So what he did was he basically went ahead and he rented this house, and then he basically put this house up on rent in South Delhi, and he started renting a house in Gurgaon. And to his surprise, the rents in Gurgaon were higher for some reason, especially for the house that he was getting. So he was actually still in a loss, right? And he was basically not able to sell the house in South Delhi, and it was really, even though he was trying to sell it below his buying price, so it was basically causing him so much stress that he's losing out on so much money. So this is what I'm making this video for. You don't have to lose out on all of that money, and you don't have to take on all of that stress, right? So it is important that when you make this decision, it's a huge financial decision, right? Most people make it once or twice in their lives. Don't go ahead and make it in a haste. All right, so if you're buying it for personal use, just focus on location and go ahead and get it, right? Anything that you get, that is good enough for you. After that, now this is the point, which is about investment. If you're investing, if you're basically pushing money into a property so that you can gain something back, some rental value or some appreciation, that's what we're going to be talking about for the rest of this video. And really, the whole perspective of personal use and having that feeling of that yes, I own a house, and I can basically create a family in there, that's not really what this video is about after this point. Okay, so now coming to the 3 reasons why I do not recommend that you buy a house in India, right? First, we'll compare the returns, and this is absolutely necessary. All right, what do I mean by comparing the returns? See, we have to understand, if you invest in a property, you look for returns, right? You look for returns in terms of rent, and you look for returns in terms of appreciation. This first point is about the rent. What kind of returns can you get from rent? And we're going to compare a couple of things. First, we're going to compare the Indian houses, then we're going to compare them with the Indian banks, then the US houses, and then we're also going to compare it with the Indian stock market. All right, so all of these have to be compared, of course, because these are all things that wherein you can invest your money, right? So let's actually compare this. And US is just one country we picked. It's not really the best housing market either, but we just picked it randomly because again, it can be used as sort of a benchmark, right? So if you compare these, and really, it's really about comparing the P ratio. If you do not know what it is, let me tell you. P ratio is basically the price upon the earnings. So what do you pay for the property? That's your price, right? Divided by the earnings. Now the earnings is what does the property help you earn every single year. Okay, so the P ratio, that is basically the per year P ratio. That's what we're going to be using to calculate the amount of money that you can make. And this is really the standard way to find out how good an investment, basically some asset is wherein you're investing, right? So first, Indian houses. And let me actually give you brief example now in the area that I live in, and I basically stay in South Delhi only. So, the a property that is worth 1 crore rupees over here, right, is basically whatever is worth 1 crore over here generates around 25k profit, right, per month, of course, right? So 1 crore rupees, that's your price, right? That's in the numerator. Then that will be divided by 25,000 rupees, and again you'll gain 25,000 into 12, because 12 months you gain 12 times the amount. And I'm not assuming that the house is empty for 4 months, or you have to factor in a lot of repairs and maintenance costs, everything. We're just leaving all of that out for now. All right, for all of these calculations we'll leave it out. So just to make things simpler, 1 crore divided by 25,000 into 12, things come out to around 33 upon 1. That's basically what that means, is for every 33 rupees that you spend on a property, in basically on a house in India, right, or on, basically this is for my area, but again this can be separate for your area, but mostly in India it's going to be the same. For every 33 rupees that you spend, you gain 1 rupee at the end of the year. So if you spend 33 rupees on 1st January, then on 31st December you will have 1 rupee, right? If you spend 66 rupees on 1st January on this property, right, if you invest it over there, then you'll have 2 rupees, etc., right? And this keeps on going forward. So this is the PE ratio, and I just wanted to explain it to you a little bit better so you understand. So for every 33 rupees you're gaining 1 rupee, right? It's simple till here. Now let's go ahead and move to the Indian banks. Okay, and let's say that Indian banks on an average they give you a return of 6%. Right now, due to COVID and everything, it's basically around 5%, 5.5%. But some banks will still continue to give you somewhere around 6%. And either way, I expect it to go up a little bit in the upcoming days as well. Either way, so 6%, just keeping it simple. So if I invest, let's say 100 rupees in a bank, is it safe to say that the bank will give me 106 rupees at the end of the year, because they're giving me 6% return, right? So 100 rupees, that means I gain 6 rupees after my 100 rupee investment. That means the P ratio can be 100 divided by 6, which comes out to be roughly around 16, right? So that means for every 16 rupees that I spend with a bank in terms of an investment, right, in terms of a fixed deposit, right, whatever I do, I'm getting 1 rupee at the end of the year. What does this tell you? It tells you that just keeping your money in a bank in a fixed deposit can sometimes be a better investment than Indian real estate. In terms of the rent, I'm not talking about the appreciation, in terms of the rental value, then the banks are basically doing much, much better over here. They're giving you a much better return, right? And don't be surprised over here, because let me actually show you some more things. Now let's talk about the US houses. This is again a very important benchmark that you need to understand. I just picked a random house on Zillow over here. Now this is not a very fancy house. I can tell you, you will find cheaper houses and you will find a better PE ratio as well. For this house, I'm just taking an average, so I just basically scroll down a little bit and I found this one, and I like this one, so I'm basically using this, right? It's a decent house, if you can see in the pictures, right? It's a decent enough house, and it's in a good area. It's not in a very bad area either. It's in Daytona Beach, Florida, right? And basically what I'm trying to show you is that, all right, this house is worth $185,000, right? This is actually a 3-bedroom apartment, okay, 3-bedroom 1-bath apartment. All right, and after that, let's just go ahead and see its rental value, because again, that's what we are mostly interested in. See, the market value based on this website is basically much higher, so they're selling it at a discount, you can say. But again, this is not something we're getting into. Unfortunately for India, I could not find such a good website, right? So basically we are looking for rental value. Rental value is over here. So this basically, the estimated rental value of this house is around $1,394 per month. Right? To keep things simple, we're gonna just assume everything is in rupees only. The whole price, this can be 1,85,000 rupees, and this can be 1,394 rupees, because we don't want to get into the conversion game, right? Now, when we divide this, again, we have to calculate the P ratio. So this would be 185,000 divided by 1,394. That's the rental value multiplied by 12. Safe again, basically the price that you pay for the property divided upon the earnings that the property brings you. That's the rental value multiplied by 12, right? So at the end of the day, the US house, this average US house, is costing you around 11 by 1 PE. What that means is, for every 11 rupees that you spend in a house like this, you get 1 rupee return at the end of the year. And of course, this is just the rental value. Of course, all of these houses, we are not factoring in the appreciation. So all of these, of course, will appreciate as well, just like the Indian houses as well, right? So that's one thing, right? So you're basically seeing that the US houses are actually much, much cheaper at this point than most Indian houses in decent localities also, right? So that's one more thing for you to consider. Okay, now let's come to the factor where we are comparing all of these rates with the Indian stock market. Let's just say that you again have some money in the bank that you would like to invest, and you don't want to put it in an FD, you don't want to put it in a property or anything. Let's compare it with the stock market, right? And the way you do that is basically you have to assume what is the average annual rate of return. And I've taken the average annual rate of return for Sensex for the last 10 years, and it's coming out to around 13% right now. All right. That means for every 100 rupees that you're spending on the stock market, on basically Nifty or Sensex stock, whatever you're buying, right? You are gaining 13 rupees at the end. So that means 100 divided by 13, that would be the PE ratio, and that comes out to be 8 by 1. That means that you are basically making 1 rupee for every 8 rupees that you spend at the end of the year. If you understand, this probably comes out to be the best investment of all time. But again, one thing to note over here is the market does fluctuate a lot. So this return is not guaranteed every single year. You will basically have to wait for, let's say, 5, 7, 10 years sometimes to get this kind of return, but definitely it will be there. That's one thing for sure. All right. So again, this is very important for you to understand, right? So if you compare the Indian stock market returns and Indian banks and US properties, Indian properties in terms of the houses, you see that Indian houses are actually the costliest assets of all. That means that Indian houses are actually a very, very costly asset and do not seem to be a very good investment from this point of view. But for all of you who think that, okay, this is just the rental value, we're in the game for appreciation. We don't really care about the rental value. We're in this for the long term. And in 10 years, we see that this property will be worth, double or triple its price or something like that. So that's something that we'll clarify in the next point. That's my point number 2 over here. And that is rent versus appreciation. So all of you guys who are interested in the appreciation game, let's talk about that, right? So if you know about the property scenario in India and how it was doing, see, properties used to be very, very cheap as compared to other countries in India. And around the 2000s, if you really were present and if you really do your research right now, you will also see that from 2000 to 2003, and don't quote me on that, don't say in the comment that look, I bought a property in 2000, right now its value is the same, etc., etc. It depends on a lot of factors, but for most cases, from 2000 to 2003, you will have seen that basically the property went twice in its value. If you spent 100 rupees on a property, now it's worth 200 rupees in 2003. And the same happened from 2003 to 2006. Basically that 200 rupees converted into 400 rupees, right? So properties were basically doubling up in price and they were appreciating every 4 or 3 years. And this was happening for a long, long time, back in the 1980s, in the 90s, and then even in the 2000s, early 2000s, right? This was happening. Now, here's what happened and here's what is changing at this point. If you see an average property in Gurgaon, or if you see one in South Delhi right now, right? And of course, these areas are the ones that have definitely grown in the last few years as well. I think you'll agree with me, especially Gurgaon, right? And when you compare this, from 2016 to 2020, this is just one property that I checked, 2016 to 2020, that 100 rupees from 2016 that you had invested in a property, that changed to only 115 rupees in 2020. So it didn't even double. It's not doubling. It's been 4 years, right? It's not doubling. It didn't even become 150 from 100. It's just 115. So that's almost a 15% return in 4 years, right? So it's very important for you to understand that the whole appreciation game that was happening in India, that is actually coming to a halt right now, especially in the metro areas. If you're talking about non-metros, then yes, it's still happening in some places. And definitely, areas like Noida and Faridabad, especially around Delhi, if you're looking at them, they will definitely be growing a little bit more in the next few years. But again, all that crazy appreciation of doubling of the prices in every 3 or 4 years, that is not the scenario right now. That scenario is actually gone. All right. And finally, my point number 3, and this is about the global scale. It's very important for you to understand one more thing over here. All right. Coming back to the 2000s, right? When a property in US, basically a house in US, was basically worth so much that whatever if you had some money, right, X amount of money, and you could buy one house in the US, for that X amount of money, you were getting 3 houses in India. That was the scenario in the 2000s. And that's why the property rates shot up, because the global scale was actually not correct. Basically, India was much, much lower in the global scale, and the properties were actually much, much cheaper over here. So people could buy 3 properties in India for whatever they could buy one property in maybe the US or maybe in Dubai, etc., etc., right? But now in 2021, if you see the global scale, if you have money to buy one property in the US, that property cannot even buy one single property in India. It's happening a lot over here. So if you can buy one house in the US, turns out you cannot even buy a full house in India with that money. You will still have to take some amount of loan, right? So this is happening right now as we speak, and you can actually compare this. If you talk about the metro cities, like Florida is of course a great place to live, right? And I have not chosen a broken down area. Daytona Beach is definitely one of the good areas in the US as well. Like it's near the coast and it's near Florida. It's in Florida, so it's a good area. But again, comparing this with the Indian areas, it does not make sense, and you can actually see that the appreciation is not going to be as much. So if you're just investing for rent, again, there are better investments out there. It's probably even just better to give your money to the bank for an FD. All right. Now, with all of that discussion out of the way, what we want to talk about is, okay, if you are hell bent on buying a property in India, on buying, real estate in India. Now, this is my advice to you. I have 5 great pointers for you, and since you've stuck till here in the video, I have one bonus point as well. All right. So we'll talk about those things now. Now, the first 5 things, the first point over here is very important, which is to invest in a commercial property. If you're investing, if you're not, see, like I said, this video is about investing. It's not about, oh, I want to buy a house, I want to own it so that my parents are proud of me, or so that, I can start a family over there. That's a different thing. That's your need. And if you have a need, then you go ahead and buy it. Then it doesn't really matter whichever property you buy. But for investment purposes, I would say go for commercial properties only. Okay. Next thing, location matters the most. If the location of your commercial property is not good enough, no one is going to want to rent that property. That means out of the 12 months, chances are 5 6 months that property will not be rented out. And that means you are paying the rent for that property, right? You're basically, that rent is your expense now. You're not getting that money. So that should be avoided. Location is the maximum important factor over here, and you should definitely look into that. Look for areas with higher growth and where you see that the job market, or basically the prospects of people coming in and working around that area, or more companies opening up their offices in that area, are high. Point number 3 is to always, always, always follow McDonald's. And if you know what I mean by this, is you basically want to look for corner properties and corner properties only. If you're buying a corner property, see, the one thing that is amazing about it is that it is unique. Brands like McDonald's and a lot of other brands also, they prefer corner properties. The reason they prefer it is because, again, it's so easy to spot the property. You basically get more visibility, and brands want that. All right. So corner properties are unique. Again, they are only 4 or 5 on every floor. And again, of course, if you have only one floor or the ground floor, of course, that is probably the best thing for you to do, right? So go for corner properties. It will definitely be unique, and people will definitely want to pay rent to you, and they will basically accommodate the property so much more easily. You can in fact charge a little bit higher rent than the properties in the middle row at least. Okay, so that's easier to do as well. Point number 4 is to avoid extremely highly developed metro cities. So if you're buying a property in, let's say, CP right now, right, that's Connaught Place area, which is highly developed, I think most developed central Delhi area, which is close to any place in Delhi, and of course it's the center, so it's the hub. So buying a property over there, first off, the rates are insanely high, and secondly, the appreciation will be very, very low in such areas. So you should definitely avoid these areas. Finally, point number 5 is to look for cash flow from day one. So when you're buying a property, and at least when you're buying a commercial property, one thing you should always keep in mind is that you want to go ahead and buy a property that is already built, and not the one that is going to be built 2 years down the line or 1 year down the line, right? You want the property right now to start generating cash flow from day one. It should start generating rent from day one, right? And that's exactly the key to the game. Finally, one bonus tip for you that is very much important, and that is, do not bite off more than you can chew. See, if the income that has to go out of your pocket every month in the form of an EMI, etc., is so huge that it's going to create stress and burden in your mind, that's going to affect your life. It's going to affect your personal life a lot, and you need to be able to handle that. So my advice is, especially in the first few formative years, when you just started working and you just started getting some money in your pocket, go for the stock market, go for something easier. But when you go for properties, at least make sure that you will have a constant cash flow, or you have a plan to get that money, right? Or maybe if your rent is higher than your EMI, and every month you're getting that rent, and you're sure that the tenants won't leave the property because it's so good, the deal is so good, etc., right? Then go for it. But otherwise, don't rush into the game just to buy a property, just to buy a house for yourself, right? The real estate market is always going to be there. And trust me, while it sounds all that amazing, you do need a little bit of capital to get started in this market. And even when you get started, you should not take on more than you can chew, because otherwise, once it starts getting to your head, I have seen things going very wrong with people. All right, so make sure to not put yourself in such situations. Whatever the rent is, or whatever the income is that you have to put into the EMI, it should be mostly insignificant to you in most cases. Only then go for buying that property. All right, I hope this video helps you in understanding the real estate market in India a little bit more. I know this has been a longer video than usual, but I wanted you to understand every single facet of it and why I do not recommend buying a house in India in most cases. All right, I hope to see you in the next one. Please make sure to subscribe if you like the video, and goodbye and take care of your families for now.